Good evening, friends. Welcome to Market Mood next week, where we have a look at what happened last week and what we can expect from the next coming week. So we'll be having Vasant Bhai joining us in the second half for some fundamental analysis. So I'll start with derivative analysis for some short-term view. All right. So if I can share my screen. Okay, so what we see over here is 18,500 level has very nice open interest build up. All right, so 18,500 is one level. The next level, you will be surprised, is 19,000. So the next level on which the open interest build up is happening on the monthly option chain is 19,000. All right. So bottom line is the option writers are finding the 19,000 level safe to eat some premiums. So what you can interpret from this data is Nifty is slightly bullish. All right. It's for sure not bearish. The view is, of course, slightly bullish. Not very bullish, but slightly bullish. The second thing which I want to show you is, I'll again share my screen. I'll teach you how you can interpret this option analysis. One small trick. All right. So over here on the put side, if you see, the highest open interest build-up is on 18,000 levels. All right. So if you take it from the ATM levels, 18,100, the put open interest build-up is very near. And the call open interest build-up is very far. All right. That means that option writers are expecting to for the market to move up rather than down. That's one way to analyze option chains. As we have other sessions in the coming weeks, I'll keep giving you these small tips and tricks. All right. Let's move ahead. I'll start with Nifty. So what happened on Nifty this week? Very important thing happened. All right. So Nifty broke the nice psychological resistance level of 18,000 and closed above 18,100. You can see this on the charts. I'll just expand it. So this is Nifty 50 weekly chart. Lots of trend lines drawn over here. I'll tell you what is happening in these trend lines. But Nifty has closed above 18,000. Nifty has broken 18,000 levels and has closed above 18,100. All right. Mr. Vandit, hello. Guys, you also keep typing in so that we can have a two-way communication. All right. That's the main crux of having a live session. Okay. Now, what you can interpret from this, if, mark my words, if Nifty stays above 18,000 levels, as long as it stays above 18,000 levels, we can say Nifty is bullish. Okay. Once the 18,000 levels are broken, then only we can consider it to be bearish in the short term. All right. I'll just show you what's happening in Nifty on the monthly chart very quickly. So we have this, I've drawn this flag and pole and flag formation. Nifty is breaking this flag and trying to move up. So this is a nice copybook technical setup. Now let's move to Bank Nifty. I'll show you the weekly charts. On the weekly charts, there is a lot of supply over here, too much of supply. You see it, and that's where Bank Nifty is taking resistance. All right. So Bank Nifty also needs to break out with a lot of momentum to break this supply. It is a very solid supply or resistance. All right. One more thing I want to tell you is, let me go back to Nifty. Some more thing which we need to learn along the analysis, right? So you see over here, the last candle, the last week Nifty candle was very small, very small. And you see the ATR, average true range, there was range contraction. So on the weekly charts, whenever you see range contraction on the indices, the next week there's a high probability of a range expansion, which you saw over here. The same thing happened in Bank Nifty as well. All right, there is an engulfing candle, a candle whose range is bigger than the previous candle. All right, I am keeping the thing simple, not flooding you with technical acronyms. All right, so one more thing is PCR. All right, PCR level, put call ratio. So Bank Nifty was not so bullish according to the PCR ratio last week. So that is why you see a kind of doji over here and a little nice solid bullish candle over here. Now let's move to some global views. All right, and then I'll choose a sector for you as well. So I've been saying for last 4-5 months now that 4-5 weeks now that global indices are at such levels that if they rebound from here, we can expect a global recovery. Otherwise, we can see a multi-legged correction. I've been saying this for last 4-5 weeks. And what we've been seeing for last 4-5 weeks is all the indices have been taking support at these levels and consolidating at these support levels. Now this week, there is some decent movement in these indices. I'll show you one by one. So we have NASDAQ over here. You see NASDAQ is taking support at these levels. Now if you see a violation or breach of this candle low, we can expect NASDAQ to move lower till these levels, all right, which is 9,700 to 600 levels. Okay, and I show you the weekly chart. On the weekly chart, we see that NASDAQ has been respecting this trend line which I have drawn, and probably if this low swing, this is called swing low, it gets breached, then this trend line will be there, not breached for some time to come, and this is the level. All right, this is the level where the next support lies. All right, let me just check DJI, Dow Jones. Very interesting. All right, on DJI, what I want to show you is that there was a nice bounce from these levels. This is a kind of change of polarity scenario where a resistance becomes a support. So copybook example over here, there was a nice bounce, but you see that this trend line is acting as a nice resistance on DJI, and this is the line which needs to break. All right, on the weekly chart, you see there was a nice bounce over here, and now there's some resistance over here. This bounce, there was a one technical setup that had formed over here, which is called a divergence. You compare the prices with momentum indicator, RSI or anything, there was a divergence. All right, so that's a bullish setup. We teach it in our workshops. All right, so this is your DJI. Then we have FTSE. FTSE on the weekly chart, as you can see, has been taking support at this multi-support levels. Very nice demand over here. And again, here the same technical setup of divergence played out very well, and FTSE also recovered because maybe the Sunak effect. All right, so you see the next resistance for FTSE is over here around 7,400 to 500 levels. All right, so this is what FTSE tells you. Now I'll tell you the sectoral analysis. First, I'll just check out the comments. Mogambo Khushua, can you analyze Mahindra and Mahindra, sir? I bought it on all-time breakout. I'll for sure do that. Preeti Rathi, volume is too low. Kindly do something about the sound. All right, I'm okay. Volume is okay for other people. Great analysis, sir. Love from Meerut. All right, guys, Meerut is nearby. I'll sometime visit you. There's a shop where I go and have good chicken. If you so I'll sometime visit Meerut for sure. Show me love when I visit Meerut by treating me at the shop. All right, that was a poor joke, guys. Sorry for that. I'll just show you our sectoral analysis before I check out Mahindra and Mahindra. CNX metal. Right, all. Okay, so this is Nifty metal. So this Nifty metal, this was the sector which we had chosen last week. The reason was there was a nice long build-up in all the metal stocks last week. All right. So this was the pick. This week the scenario hasn't changed. There is no sector this week for the short term that looks better than this sector. So again, for this week we have Nifty metal. The reason was one derivative reason which I told you, long build-up. Other was, you see this pole and flag breakout. So technicals and derivatives combined made us pick this sector. All right, and a level which it can reach, wait for it's exactly at a resistance level. So if this resistance level convincingly breaks, then we can expect these levels. All right, so check out metal sector this week also. All right, so one question was there, Mahindra and Mahindra, for sure. I'll just check out. M&M, that's M_M on trading view, right. All right, so Mahindra and Mahindra has given a breakout above all-time high, but there's one thing which is lacking in this breakout: conviction. Why? You see this last candle, there's a very big upper wick. That means that, at one point there was some selling in Mahindra and Mahindra. The breakout is not very convincing. So I would love to see a nice solid bullish candle, and if I would tell you to go long, I would ask you to go long only above the breakout of this particular candle, because we see some selling pressure in this breakout. It can be a false one. All right, so you need to deal with it with some precaution. Okay. All right, guys. So now we have Vasandai for some fundamental analysis. I simply love his analysis. I'm sure you guys are going to take the best out of it. All right.
Hey guys, before I start, I want you all guys to just give me a hi in the chat, and that's just to make sure that I'm audible and you guys can clearly see me also. I'm visible also, and by the time you guys type out yes, I'll open up one chart on my screen. So it's the chart of Nifty PE. It's not something very complicated, something very easy. So I'll just simply open up that chart. And I just want to discuss one simple point, and it's not very complicated as well. The very first point is, hi everyone, I can see your chats now, so that's the lag time. Perfect. So the thing is, as an investor or as someone who would want to look at the long-term picture, a picture that goes for at least 3 to 5 years in the future, there is not much that I can say every single week. Nothing much is going to change every single week, right? As an investor, if you're trading, well, then it's a different story. But if you check year on year, and if you check this Nifty PE chart right now, you can see this red color line represents the Nifty price, and the blue color line represents the Nifty PE. What's amazing is you can see that Nifty was around 18,000 and above 18,000 at this same point in the year. That means last November, it was around the same area. And this November, it's back to around the same area. So it's above 18,000 again. Nifty is, going high now. So it's, bullish state. The stocks are also going up. Now the price is the same. That means this red color line is at the same level. But observe this blue color line, the Nifty PE value. Last year, when Nifty hit 18,000, 18,500, the PE ratio was going berserk. The PE ratio was more than 35, it was more than 40 as well. But then, this year, the price is at the same place, but the P ratio has cooled down. It has come down to the median P ratios of 21, 22. So I'll take this chart away from here now. Basically, what I wanted to say is that there was a lot of liquidity in the market till last year. That means there was a lot of money in the system. Banks were also decreasing the interest rates. Government were doing nice fiscal stimuluses. They were giving out a lot of money. And most of that money was coming into the market. It was going in all sorts of stock. So everything was going up, including the index itself. And that was not sustainable. But in the last 1 year now, the liquidity has started to go back. That means banks are increasing their interest rates and governments have stopped doing any fiscal stimuluses as of right now. And this has caused the liquidity to go down. But even though liquidity has reduced, Nifty has managed to go back above 18,000, and the PE is around 21, 22, which is the median PE. Now, I don't know if it would mean bearish or bullish. What I can say from a fundamental viewpoint is that now it looks like Nifty has some space to expand in price as per the valuations. The valuations of Nifty are at a median level, I think around 22. So it has some space to go up from here. And the thing that has changed in the last 1 year is the earnings. It's the EPS of Nifty, which is the second component of the PE ratio. So the earnings have come up so much that even though the price is same, the PE has gone down. And this means that the price rise that we have seen happen in the last 1 year, that is, in the last 1 year we have seen volatility and it coming back to 18,000. This last 1 year was actually a little more sustainable compared to the previous years, where people just put all the money they had into Nifty and prices went up. This price rally that we're seeing is a little more sustainable fundamentally because it makes sense. And you can see this in people's attitude as well. If you would have gone just 2 months ago, a lot of people were talking about 15,900, 15,700, 16,000, 16,500. Now, do you hear anyone talking about 16,000, 16,500? I don't think so, right? So that is what is changing. People are now looking forward. Things have become sustainable. And the simple reason is that if Nifty comes down to, let's say, a 16,000 level, Nifty's PE value would be around 16 or 15 or sort of those levels. And those would mean that Nifty would be very, very cheap. It is only during recession or only during times like the 2008 crisis or Corona that Nifty P goes down to like 15, 16. So that is not something that happens very often in the market. And that is something that even institutions do not allow to happen. So that is something that's happening in Nifty. And of course, apart from that, there's a whole bunch of macroeconomic news going around. You know, Sunak is the new Prime Minister of UK, our brown munda, India ka damad, if I would want to say. So he is now the Prime Minister of UK. People are reporting good numbers. Interest rates have been hiked by all the banks across the world, whether it's the Federal Reserve, the European Central Bank, or the Reserve Bank of India. Everyone looks to be on a straightforward path. So that means that uncertainty seems to be going down. The only real uncertainty in the markets right now, I think, come from the foreign exchange, which is basically the dollar, right? The dollar seems to be strengthening again and again and again, more and more. There seems to be a lot of demand for the dollar right now. And we made a video on this very recently. You can check out that video as well. Something that Mrs. Nirmala Sitharaman said, our Honorable Finance Minister. And we have made a video on that, so you guys can go check that out. Basically, because of that dollar increasing its strength, rupee has been falling a lot. And that is, I think, something that is affecting the market a lot. So that is, I think, the only negative point that is really, really uncertain in the market. What's going to happen to rupee? Is it going to stabilize here? Is it going to go to 90 rupees? It's going to 100 rupees? Who knows, right? So that is something that's creating uncertainty right now. And apart from this macro view, if we take a look at the sectors, in the last quarters, the last 2 quarters of this year, if you see, banks have been doing very well. And not just private banks. Till this year, or till even last year, the story was that private banks are doing very well. Government banks have bad management, so to say, and they're not doing well, NPA problem, all those things. But this year, some of the private banks and some of the public sector banks as well, both of these guys are doing well. So that is a good sector to go and do your stock picking right now. But give your time and do your own research. It's going to take some effort. So those are the places that you can go find out. Then another sector that's doing very well, and I think one guy asked a question to Sharma sir also about Mahindra and Mahindra, right? That's the automobile sector. So there's a lot of things brewing up in the automobile sector as well. So that will be a good sector for you to go and pick out the stocks that are doing very well. And that you can do simply by looking at their results, looking at their fundamentals. So apart from that, the only thing that's sort of doing not badly, I would say, maybe not so good, is all the sectors and all the stocks related to commodities. Now, when I say commodities, I don't just mean metals or gold or any of those things. I mean commodities even that include the food things, right? I mean commodities like rice, like oil, edible oil especially, like cotton, wheat, all these things. These things also seem to be increasing in prices. Now, if there are companies in India that import these as raw material, that import edible oil as raw material or cotton as raw material, for example, these companies will be facing a big inflationary pressure. And this could be seen in the results from the textile sector companies as well. A lot of textile sector companies have reported results, and we have seen that their operating margins, their profit margins, both of them have fallen down by a huge percentage. So companies that had a 10-12% operating margin before this quarter now have gone down to almost 4 to 6%. And that's almost half, right? So that's a big fall. Now, again, if you want to speak about the stocks itself, the sector might be doing very bad, but if you would have looked at the great geniuses of the stock market, not just in India, around the world, these guys like to pick stocks and like to invest in stocks when times are really bad, when there is fear in the market, panic in the market, and all those kinds of things. And we've read that on Instagram and YouTube and all those places, right? So this could actually be a good opportunity for you guys to check out the textile sectors and other sectors related to commodities as well. But again, do your own research. Put in the time, do a lot of effort, put in a lot of effort, and you are sure to find some good companies as well whose earnings are going to rebound back. So there should be a lot of demand for their products, there should be a lot of demand for their services, and those are the kind of companies that you would like to have in your portfolio. So it's a good time to go and select your stocks. And of course, apart from that, I think the one final thing that I have to mention is the kind of consumption India had during Diwali 2022. During the festival week we had last week on Diwali. During Diwali day and the day before, which was Dhanteras, India has consumed almost 400 metric tons of gold. So that has brought in almost 1.2 lakh crores into the market, and that's very good for all the shopkeepers because they'll employ more people, they look to expand, and they look to generally be more lucrative, and they look to spend their money, right? So it's very good on the consumption standpoint. Apart from that, another number that seems to be coming in temporary right now is the number of sales which has happened to the white goods market. Now the white good market is basically electronic items like computers, mobiles, laptops, your air conditioners, refrigerators, all those kinds of things. And even they have seen a very high consumption rate this particular festive season. And that is all going to affect the quarterly result which will come out next quarter. So next quarter's results based on all the consumption stocks should be very good. That should be some area where you should be bullish on. And that is something that could keep the market afloat as well. So I think this is it for all the fundamental analysis. But If you guys have any other question, there's so much to cover in fundamentals. There's GDP growth rate coming from USA second quarter. Even that was good. Estimates said that GDP from the second quarter in USA would be around 2.2%, but it came out to be around 2.6%, so it was marginally better. So then inflation numbers seem to be kind of dwindling down slowly. So governments are able to comfortably control inflation at this point. That's the viewpoint of the future. Everything seems to be going normal. But like I said, there are so many macro points and so many fundamental points, so many sectors, so many different areas to cover, that if you want me to cover some specific area, let me know in the comments below, and I'll make sure that I cover that particular area specifically. So with this said, well, I think I'll call back on Sharma sir. And with this, I think we'll end the fundamentals part. But I just have one question that I want to ask Sharma sir, so I will call in Sharma sir again. Yeah. So the question that I wanted to ask Sharma sir is that last week, one turbulent thing happened, which was that SEBI released a new circular.
Yeah.
And in that circular, there was something about the stop loss and the range that you can keep, and depending on what your strike price is, depending on what the premiums are, that stop loss range might change. So what happened there?
Yeah, actually there was a circular by SEBI. That was to protect the free trades that are happening in index options. So it was to protect the retail traders from those freak trades. So the circular says that, if your premium, if the option premium is trading at above 50 rupees, then the buffer that you can keep in the stop loss limit price should be less than 20 rupees. Okay? Should not be more than 20 rupees. If it is more than 20 rupees, your order will be rejected by the exchange. If the option premiums are more than 100, then the range, this is called limit price protection range, LPP range. So that should not be more than 40%, otherwise your orders will be rejected. So when you are putting the trades on Monday, make sure you keep this in mind, otherwise your stop losses will be rejected and you can have some unlimited losses. So this is one thing which you need to keep in mind. All right. So yeah, very important thing. Thanks a lot for asking me this.
So I think that was one interesting point, and I think with that we'll close our analysis. But do let us know in the comments if you want a YouTube video explaining that SEBI's, SEBI's rule change, particularly on this rule. So if you want a YouTube video or you want some other kind of explanation, let us know that in the comments as well, and we'll make a video for you on that particular thing. So with this, I think we shall take your leave. Thank you all for attending today's market analysis, and we shall meet you again next week. Bye-bye.